Good afternoon. This is Mr. Not Advice. This is my end of the day update for July 23rd, 2026. As always, this is for education and information purposes only. Today we had macro stress going on. Of course, I get tired of saying this because of the oil issue in the Middle East. And then we had micro stress with Google earnings sparking a breakdown in the hyperscalers and more broadly just tech. That triggered a drop down in all the indices today. Rate height odds were dragged higher because they're going to be tracking oil for the time being. That drove gold lower, along with Bitcoin tumbled with tech today. The stock market is facing three pressures today. Number one, the impact of higher oil prices on inflation, and then, of course, that effect would have on consumer spending. The growth outlook for mega cap tech, as was represented by Google's earnings. And then what both of these mean for the Fed. July is now very much in play for a rate hike, which I think would be a mistake. But looking at oil, Brent crude hit $100 a barrel for the first time in 2 months. This was after Iran-backed Houthi militants said they attacked two Saudi Arabian tankers in the Middle East. The strikes appeared to be opening up a new front in the regional conflict. And that's why we had such a strong move in oil today. I think it was up $5 in the oil futures. As I said before, oil and interest rates are going to move in tandem. And so, as seen here, this is the expectation of CPI and PPI, consumer price index, as well as producer price index, two of the Fed's favorite inflation indicators, as they now continue to move higher. Treasury yields were higher across the curve, led by the 2 year, the short end of the curve, which was up 6 basis points, and even the 30 year was up 2 basis points, with 30-year mortgages are pushing to the highest level since 2008 crisis. The dollar, as a result of interest rates being pushed higher, drove the dollar dramatically higher. So while we are in a dollar long trade for the American excellence trade, we might get it if oil continues to push higher. Trump was in a meeting this afternoon. He had tweeted where he was going to decide on whether or not to unleash the mother of all bombing campaigns, the likes we've never seen before, tonight or tomorrow or not at all. This is a shot of Google, which Google dragged down the Mag 7 stocks, which were down 5% today on the back of Google's plunge and somewhat Tesla's plunge. It was the worst day for Mag 7 stock since April 25th. And the in basket index broke below all of its moving averages, the 50, the 200, the 100. This now technically, their support level is at least another 4% lower. The narrative of punish the check writers versus the check receivers is still ongoing. So microchips are doing well, while hyperscalers are getting hit, the check writers. Question remains, how long can this last as trends in many of the hyperscalers continue to deteriorate, as is shown here by the surge in hyperscaler credit risk? As I've shown you this before, as this red line goes down, you can see that the x-axis here, or this axis here, numbers get higher and higher. So the cost to insure against default for credit default swaps, as they're called, for hyperscalers continues to rise, which is only going to continue to push the price or the stocks of hyperscalers down. Continuing the discussion about hyperscalers, this is the cost of credit default swaps for all of the hyperscalers, as well as some select tech companies. And Oracle, SpaceX, and CoreWeave are the riskiest of all at this time. Korea was well bid overnight, but Despite that buying spree at the open today for the US markets, all the AI leaders were lower on the day, with the S&P XAI ending basically unchanged. Mag 7 weakness pushed Nasdaq to be the biggest day's loser, but all the majors were ugly, with small caps the strongest index today, helped by the usual ETF rebalance buying at the close. Small caps will continue to get hit and be challenging to move into a consolidation or uptrend because they are going to be the most interest rate sensitive. Understand that when you see oil move up and interest rates are ticking up, there's automatic algorithmic selling going on for portfolio managers to trim down their risk in small caps. So that only helps exasperate the selling in small caps. The S&P has slipped below the 7480 risk pivot because of macro and earnings risk intensifying. I think that's a short term view that is incorrect because, other than Tesla, as well as Google, earnings, as I've shown you before, have been largely beating. I think 80% of S&P companies that have reported have beat earnings, and a equal amount or close to an equal percent that have reported have actually increased earnings expectations and outlook. There is a mild positive gamma condition at current levels, so that's adding a little bit of a cushion. However, heavier put buying continues to cause the risk that dealers will flip into outright negative gamma, which would open the path lower to 7,300 on the SPX. If we're looking where the SPX needs to get to, where negative gamma to the top side would force dealers to buy, it's 7,500. But that's today, and this is a very, very fluid environment we are in. Gold got pounded today, primarily because the US dollar strengthened. Strong areas today were defense stocks, as well as healthcare and REITs were green today. Bitcoin decided today that it was going to trade like it was a high tech beta play, and that dropped it back below the 65,000 level. And that's despite the fact that inflows into Bitcoin ETFs hit $1 billion this week. So 7,500 on the SPX. We closed at 7,408. So we are not yet, we flipped below the 7,450 level, and this move could take all the way down to 7,300. We just had earnings released by Intel and they beat, and the market futures are already up 118 on the NAS, flat on the ES at plus 10. I don't know if we're going to see any follow through to that tomorrow because the market right now, as I said, has entered negative Gammaville down to 7,300. All small cap stocks were hit today. So if you're looking at EOSE or looking at PCT or IND or any small cap stocks, they're going to be continue to be sensitive to the price of oil vis-a-vis interest rates. And any weakness, I think, is shorter term. With the rights offering done on EOSE, I'm going to do pretty much my weekend update's going to be largely about why I think there remains to be a strong bull case for EOSE. I am not concerned. I think that the rights offering, while some people have been talking about the lack of participation by retail, I look at that as a positive from this context, that it forced more institutional buying, and therefore it also produced less dilution on a look forward basis, which is going to help cushion any hit from the dilution due to or against earnings per share. I am not stepping into this market trading, and my members are not either, until I see at least 3 days of ceasefire. It's what got me into the market in June. And that's when we had a great month. And when the shooting started again, we kept trading that. And that next round of option contracts all got hammered. Bottom line is the US cannot afford to continue to have to pay these rates or pass through these rates to both corporations and the public. Goldman Sachs trading desk today highlighted the following psychological levels to keep an eye on. The SPX must break through the 50-day moving average, which is at 74.62. The 10-year yield is at 4.7%. West Texas Intermediate crude at $90 a barrel. And then the VIX today did see a 20 handle. Now we are in a seasonality period where the VIX should continues to strengthen. However, Nomura's Charlie McElligott says that VIX seasonality is about to lift off, and that could cause the VIX to continue to move up, maybe even spike. Good for our VIX trade, not so good for stocks in general. I had meetings today, but I turned off my screen at about 10 a.m. I encourage you to do that once in a while, but sitting here and staring at the screen is not going to cause you to generate any alpha. It's going to make you feel worse and it might cause you to start over trading. Right now, I have a whole lot of sitting on my hands. This too will pass. And when it does, if we can get enough selling into the market, I very well could see that we are going to rally into the fall. So remains to be seen. I hope you had a good day. I hope you take today's action in context, and I will see all of you in the boardroom tomorrow.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping.